A great evening, everyone. Welcome to Prime Business. I am Pius Kujobaka, and look now at our stories. The Ghana Revenue Authority is stepping up efforts to close the widening gap in VAT payment. This has led to the inauguration of a new compliance and enforcement unit under the Domestic Tax Revenue Division to ensure VAT is paid accordingly. Commissioner General of the Ghana Revenue Authority, Anthony Kwesi-Sapon, disclosed this to Joy Business and saying that the VAT will boost state revenue and help in achieving the mandate of the authority. More in this report.
According to the GRA, value-added tax has the potential to boost the country's revenue mobilization if the law is well applied fairly across the country. The inauguration of the 26-member enforcement and compliance team is part of strategies by the authority to ensure that the wide gap in VAT collections are closed before the end of this year. Commissioner General of the Ghana Revenue Authority, Anthony Kwesi-Sapon, told Joy Business that the unit will be resourced to increase VAT collections from the current 40%.
We are only achieving 40%. That will mean that there's a gap of 60% that we need to fill to bring in the revenue, and that gap is huge. And therefore, if you have such a huge gap as tax administration, as GRA, as our core mandate, then we need to put the resources and focus that the state has placed on us to ensure that we reduce this gap to a considerable minimum. Because we believe that when we enforce VAT and we carry on the reforms as it is, the revenue of the state will go up, and it will also allow the government to deliver on the mandate that it has promised Ghanaians.
Commissioner for Domestic Tax Revenue at the GRA, Dr. Martin Yamboriga, charged the team to act firmly and professionally to ensure taxpayers' rights.
We encourage taxpayers to seek guidance and make use of available support channels and engage openly with the GRA. The compliance and enforcement team will act firmly when necessary, but always professionally, impartially, and within the bounds of the law. To the members of the newly inaugurated team, I wish to congratulate you on this responsibility. You are entrusted with upholding the integrity of the tax system. Your work must be guided by professionalism, accountability, and respect for taxpayers' rights.
The 26-member committee is made up of officers from the various divisions of the Ghana Revenue Authority and to be chaired by the Commissioner for Domestic Tax Revenue, Dr. Martin Yamboriga.
Associate Director, Deloitte West Africa, Dennis Brown, has called for improved policy coordination between the Bank of Ghana and other fiscal authorities, noting that such alignment is crucial to reducing lending costs and boosting confidence among businesses and investors. According to him, weak coordination continues to undermine the effectiveness of monetary policy, especially at a time when rising risk margins are limiting the impact of recent policy rate cuts on lending rates.
Ghana governor has indicated severally in some of the press conferences that they have ensured that there is proper policy coordination between the Bank of Ghana and the Ministry of Finance and other fiscal authorities, so that they are all moving towards the same objective, although they have, different and distinct roles, right? That has to, be improved further, and that I believe, is what can, result in a significant reduction in these risk margins. Because all these factors, as we listed them, for most of them, we have indicated Bank of Ghana to work with other fiscal authorities. Of course, for some of them they would have to rope in the banks, the lenders themselves, because you still want to retain, some discretion at that level to encourage competition. We run a free market system, so you can't just say everybody should give out loans at the Ghana reference rate. Every one of them will look at their own assessment of the project in front of them and pricing the risks. But we also don't want a situation where they have such a huge margin of discretion that they can abuse it. And it's important that that is guided as well. The impact on that, if they can achieve it, will be to significantly reduce borrowing costs. And when borrowing costs is reduced, overall cost of capital goes down. It will improve access. Businesses and investors will, find capital cheaper, and then we invest in the high growth segments of the economy, expand the economy, create more jobs, going forward.
The secondary bond market actively edged modestly higher over the week, with turnover rising 20.69% week on week to 6.39 billion cedis. We have more for you in this report.
According to the Data Bank research, the development reflected steady but selective participation. It said investor flows remain concentrated in the belly of the curve, where 2031 to 2034 maturities accounted for 60.9% of traded volumes at a 15.59% weighted average yield. The 2027 to 2030 segment accounted for 25.3% of the activity at a weighted average yield of 14.43%. Long end saw limited participation, with 2035 to 2038 tenors contributing just 13.7% of volumes at a 15.98% weighted average yield. The research pointed out that the recent policy rate cut reset the pricing backdrop, driving a broader repricing lower across the curve. It added that in the coming weeks, investor activity is expected to remain anchored in the belly of the curve. Returns will also remain attractive without materially increasing duration risk.
This evening, Ghana is losing valuable investment capital and long-term growth opportunities to countries such as Mauritius, South Africa, and Nigeria due to gaps in its private equity and venture capital regulatory framework. Speaking to Joy Business, the Chief Executive Officer of the Ghana Venture Capital and Private Equity Association, Ama Jampo, says the passing of the limited partnerships framework will position Ghana as an attractive, competitive domestic investment destination to accelerate private sector growth.
We are looking to really push as an industry that's centered on private equity and venture capital to align with other established markets and jurisdictions in terms of private equity and venture capital. We do not have a limited partnerships framework in Ghana. It means that if you want to launch a fund and have a fund domiciled in Ghana, you need to basically operate under the normal rules of the Companies Act, which isn't really ideal, and it doesn't really help us to be competitive. It means that most of our fund managers have to domicile outside of the country, which is a huge lost opportunity in terms of the potential taxes, jobs, industry building, market building that we have in this country that we're losing to places like Mauritius and South Africa, for example, even Nigeria. And so the GVCA, the Ghana Venture Capital Association, is really pushing and working with Fund 24 at the Office of the President, and also with the Ministry of Finance and the Venture Capital Trust Fund to make sure that the Limited Partnerships Act is passed in Ghana so that we can be a hub for venture capital, private equity, and long-term investments into our domestic private sector right here in Ghana, rather than losing those dollars to other jurisdictions. So
let's now go to the oil and gas sector, because Ghana has been able to save some $1.5 billion as investments made from crude oil revenue earned since 2011. This was contained in Ghana's petroleum account held with New York Federal Reserve Bank. The accounts showed that the Ghana Heritage Fund, which has been set aside for the future, generated $1.3 billion, while the Ghana Stabilization Fund also generated $122 million. Now, the financials again revealed some $66 million had been withdrawn from the accounts during the year under review, while the next income of the Ghana Heritage Fund was more than $25 million. In a related development, Ghana has earned almost $12 billion as total receipts since the country started commercial production of crude oil from 2011. This was captured in Ghana's petroleum accounts with the Federal Reserve Bank of New York. More in this report.
These are monies that the country realized from the total petroleum receipts from all sources over that period. That is, royalties, carried and participating interest, corporate income tax, surface rentals, and other inflows. The value of shipments since 2000 and 2011 stood at more than $9 billion, whilst other receipts like corporate taxes reached more than $2 billion. The Ghana National Petroleum Corporation also spent about $2 billion when it comes to the equity financing cost, whilst it earned some $1.4 billion in terms of the share of crude oil that it had sold over that period. Government has also disbursed some $4.8 billion when it comes to the annual budget funding amount. These are areas that government should disburse the funds when it comes to how the petroleum funds should be used in the country. The statement of account also showed that Ghana ended 2025 with a closing book value of $1.5 billion when it comes to earnings from all our oil funds.
Meanwhile, the executive director of the Center for Environmental Management and Sustainable Energy, Benjamin Isia, is calling for increased investment in oil exploration to boost production and government revenue. He spoke to Joy Business.
Most of these wells are becoming maturing wells, so output will continue to decline until we begin to develop them or begin to engage in more operational activities to explore other areas of improving output, because these wells have been in existence for the last decade, and for that matter, output is also declining. And I think that we need more investment in areas of exploration and also areas of expanding some of these wells or doing some developmental activities so that we can increase output. If we are able to increase output, I think that revenue will continue to slide or continue to plummet. This sustainability depends on inflows from oil proceeds, as well as good decision making in terms of our investment of some of the proceeds from this oil output. If we're able to invest in better securities or better government coupons, I think that at the end of the day, those interests will plow back into the PHF. If we're unable to do that, it will continue to harm us. The other side also has to do with output, as I indicated. If the output continues to decline and prices are not favorable, the Petroleum Holding Fund will continue to decline, will continue to decrease.
All right, let's now go to the commodities market. Hello again, welcome back to Prime Business. The Electricity Company of Ghana has issued a public alert warning customers against fraudsters exploiting payment processes, stressing that it no longer accepts physical cash for any transactions. More in this report.
In a notice to the public, ECG announced that it has gone fully cashless and does not request payment for its services through phone calls. The move is aimed at strengthening controls and protecting customers from financial scams. The power distributor advised customers to ensure that all payments for electricity services, fees and bills are made only through officially approved channels. According to the notice, payments must be initiated personally by customers using the ECG Power app or the company's short code *226#. ECG cautioned the public to treat unsolicited calls or messages demanding payment with suspicion, emphasizing that such requests do not originate from the company. Customers were urged to remain vigilant and verify all payment demands before taking any action.
Despite the recent surge in gold prices, President of the Ghana Chamber of Mines, Michael Akafia, says mining firms will not be complacent, citing the volatile nature of the markets. Now, gold prices have seen dramatic reversals, with spot gold falling nearly 10% at one point. Mr. Akafia, who is also the Vice President of External Affairs at Goldfields, said while higher prices offer opportunities, companies remain cautious, balancing profits with the need to sustain operations. He made these remarks while interacting with the journalists of the Africa Extractives Media Fellowship.
The worst thing is to be complacent. In fact, the best thing is not to lose competitiveness, is to become complacent based on current gold price, because you know that what goes up comes down. So the way you configure your mind now is to prepare you for that, because the longer the boom, the longer the bust period. That's how cycles work, unfortunately, and it's like that. If it goes, it's like a fall. Anything that goes up, the harder the fall, the higher the rise, the harder the fall. And so you must be thinking. You've been doing this for a long time. So those things you put money in should put you in readiness for that price crash. In fact, because of that, when we are doing our budget, we try and be more conservative than the current gold price. We don't use the current cash price as for our budgeting. And so that itself, so anytime, every time we are assessing our performance, we try and assess our performance regardless of gold price. We say take out the gold price, because there's nothing you did. You shouldn't get credit for that which you didn't, because it's geopolitics. Don't behave, if you want to be a responsible, sustainable miner, don't behave like, because in 2012, I saw it, as I told you, 26% fall in one day. We declared a crisis, projects people, but if you prepare yourself now, then the impact will not be as hard on you when the gold price falls.
The Ghana Railway Development Authority is seeking partnership with the private sector to be able to run the passenger train service on the Tema-Mpakadan railway line. Acting Chief Executive of the authority, Dr. Frederick Apo, in a media encounter disclosed that the government spends about 2.5 million cedis a month to maintain the ongoing passenger service between Tema and Efienya. He therefore stressed that the service is capital intensive and needs more support for the service to be sustained to diversify the country's transportation sector.
Why railway, you need to make an economic case. So whilst railway is much more of about capital intensiveness, it is much more also about looking at the political sphere and the social economic development as part of it. It is not just as, okay, it's like trotro, you run, you make money. No. The financial comes through, and I'll talk about it in the freight. Because if I'm taking freight and I'm moving container from Japan to Tema Harbor, I could be charging $10 per ton per kilometer. They'll pay. And I'll use that to cross-subsidize the passenger service. You see, so that is what we have to understand about why passenger service in the railway transportation is very difficult to come about. Once you are able to put out there, people will understand the capital intensiveness of nature of the railway sector and what it takes to run it. So simply put, we have made around 700,000 cedis since 1st October. But we are spending over 2.5 million every month to sustain it. So it is a public service obligation and a social policy.
We've got the latest currency update for you. And now to some international business stories for you. And that's your business news for today. I am Pius Kojobaka, always a delight serving you.